Morning everyone, welcome to our day trading setup session. Today is March 7th, 2022, and we're going to go through all of our normal stuff here and talk a little bit about how to manage gaps that come in over the weekend. We had several of them happen when the markets opened last night at 6 p.m. Eastern time, so we'll talk through a little bit about that as we go through each one of our areas here. First of all, always starting off with our Forex Factory review just to see what the scheduled events are going on today, and as we can see through here on Monday, everything is fairly low impact. Had a couple things coming out already from Europe and Great British Pound, nothing fairly substantial here, and so just let me look down through the rest of the week as well. One thing on Tuesday evening for Australian dollar, and then of course Wednesday we have the US job openings, crude oil inventories, and then a lot of stuff on Thursday there with the euro and US dollar. So and then Friday we have Canadian unemployment change, and then one thing there for the US there. So that's kind of a quick look up what's coming up throughout the week here. So let's go ahead and jump in and start looking at our charts. Starting with the dollar daily chart here. We talked a little bit about this on Friday, and we did have a corresponding zone here on the euro. I know it went through. Said we were going to use the dollar for this, so this will be a time right now. Just looking at the live chart over here, right, we're actually dollar's down at 98.8 here, so a little bit lower than where it's at right now, but nothing substantial. So we'll probably have sometime today. If we get a good retracement, we'll have potentially a good opportunity to catch this reversal here on the euro. So just note we are in a daily picture perfect zone right now. So let's go see if we can find other areas to take advantage of this. And obviously we are in an overall uptrend. However, when you're talking about taking advantage of a daily zone, you can see here on a weekly we are in a sideways trend, so that gives us the ability to go ahead and take a trade that'll be counter trend on a lower time frame, but isn't counter trend on the upper time frames here, just a neutral trade. So we'll start looking at areas here to take advantage of this, and actually we've got quite a few. Everything is going to be small time frames for now. So what we have here is we've got a picture perfect zone. We also have what I call a picture perfect 3, which is the third zone on top of the 2 that a standard picture perfect zone has. So you've got this one right here. This is your PPZ 3 zone, and then you've got picture perfect zone with the leg in coming out of the second area, much longer than leg coming out of the first one, so you move this up and take advantage of the second zone. So obviously this goes against a lot of our other rules, trading rules here, right? This area is not protected. It also hasn't closed below this one down here. However, we are looking at this as taking advantage of a retracement into that daily zone, so that's why these areas are still worth looking at. Now what you can do is go ahead and wait until you get that very good solid retracement where you do have everything protected and taking out your left one, right? That would be a much higher probability area here. Let me just zoom in on this again so you get a better picture of this. Right here is your full picture perfect zone setup, right? But because this leg out, second leg out here is much longer than leg out, the first leg out, we don't try and use the first zone there. So I'm going to set both of these up here. And then we'll look for the corresponding zones on the Euro USD so we can take advantage of them. Not much else, right? Everything else on the higher time frame still hasn't set up yet. So we'll wait and continue to watch those throughout the day. And what we'd really be looking for is something set up kind of like that, either on a 60 or a 240. If we can get that set up, and those would be really good places to take much longer positions in. So let's go ahead and look at Euro USD real quick and just see what we have there. So first of all, so here's the daily zone areas that were corresponding to the dollar, and we had actually said that we were not going to use these stops. We're going to use the ones on the dollar as well. So if you're in this at all, you should still be in this trade because the dollar ones hadn't stopped out yet. So just this is the area that we're talking about right here. So now let's go look at this 15-minute area, and it looks like we do have the same type of a scenario. Let me zoom in on this, get a better look at it, and we do have that. All right, so we've got this zone right here, and then we've got, again, this PPZ, so I'm just going to go lower into that overall zone down here, and I'm going to drop this one a little bit lower down, really take advantage of it if price comes back down in here. And again, so this one actually has taken out the one to the left here, however, not protected on the lower end, so that would be, why this one is not a perfect trade yet. However, it's still in that daily zone area, so that's why we are allowed to take advantage of it, even though it will be a counter trend trade on the 15-minute zone. And again, nothing else on a larger time frame has really set up here, so we'll continue to watch it throughout the day. If we don't get a good retracement in there, or that one breaks through, then we'd start looking at like a 60 or a 240-minute area. If that forms up, then we'll look to take advantage of that. Jumping over to the VIX, let's just see what we've got here, and looks like we are continuing our channel up. And we talked about this on Friday as well, right? What we're really looking for, just knowing that we've got uncertainty right now because of the way that this is going, there are no zones to take advantage of. However, if the channel keeps moving, once we get back up into this 44 area here, 44 to 47, this will be a very, very good place to look for a corresponding demand zone on the major index charts. And if those two line up, this will be your good solid indicator to get back in, much longer term long positions on those indexes. So going back to just smaller time frames, again, we're talking a little bit about gaps today as well. So we've got this significant gap, and you can see we're at the open last night on all of these. However, none of them have really set up with a good trade at the gap. So just keep in mind, gaps oftentimes do present good trading opportunities, but it still has to have a good zone. The only thing that we have, if it's even remotely close to this, is on a 5-minute chart here. I'll show you this, right, where you've got, this would be a picture perfect zone because this gap is treated as a full candle up. So you would draw this, again, down in the bottom part of the zone. One reason I don't like this one is it's not protected down here. And so you've still got another gap below it. So I think this is a much lower probability. I would not take this as a trade, but it's an area where you could see price bounce from. So just mark it as such. And let's go ahead and jump into our indexes now. And from the, so this is the S&P 500 futures. And just to take a look at the daily chart here, what we're looking for, we are still in this channel down, right? We had 1, 2, 3, 4, 5, 6 days in a row where we're all inside, basically all inside trading days here within this one candle. We're really talking about, this whole entire area. Really, this is probably one of them, but in reality, you're really talking about this, and I can't, should be able to drag this one out, yeah. Really talking about kind of this area right here that we need to get in or out of before we take any, longer term positions here. And again, we need candle to close below the purple line right here to really indicate that we're in this longer term downtrend. So that's where we're at on a bigger picture context, and we are approaching the gap right now. And again, we would be looking for an actual, good zone setup at the gap. And as I'm looking through this, I'm just really not seeing it. Everything is just a little bit messy. So just jumping over the 15-minute chart here and zooming in on this just to get an idea of what this, looks like. This is, you could almost call this a zone. So if we do, let's go a little bit further into it, come up above here. Right, this takes advantage of the gap. It technically is a zone, right? You got your leg candle in, and then another, sell leg candle here as well, and then a nice strong leg out. This happened, outside of the overnight trading area, so this would be a good bull trap if price doesn't get up here before 9:30. So that would be another good indicator that this may work here. The zone is just, it's not a good solid one, not one that I would put a whole lot of faith into. We'll keep this one on for now, and then let's take a look at the other indexes and see if anything else jumps out of there, so we get additional correlation. Maybe multiple indexes all look the same, and we come back and maybe actually take one of these trades here. But that's about the only thing that's looking reasonable there. And again, remember, we are still in the overall downtrend, even down here on a 240-minute chart. And so we don't have a lot of opportunities to get back long yet on this. And so just to show you where this moved to, right, you've really got, here's your new overall trend lines. So this is your channel, and as long as price stays in here, you continue this downtrend. If price breaks above here, now we've got a confirmed neutral trend, and then another high and another higher low, then we would have another uptrend again. That's when you want to get back on, a long position here. All right, let's look at NASDAQ. Remember, NASDAQ, we are still coming down from this PPZ area here that wasn't solid, but we drew it up, as the, because it did present itself as an actual zone, and we knew that we were going to get some sort of a price movement out of here. We just weren't sure when. Price didn't quite come up to where our entry point here was on the red line, but it is still coming down out of this area. So again, overall downtrend, just keep that in mind for now. Now going back and looking at this gap, we're actually in it and closing it right now. Again, this would be the best area for anything you could call a zone, and I'm scared too because it's not a clean one. But this would be it right here. So again, so we've got two markets now, ES and NQ, that both have the same type of a setup. So that's a positive thing, something that we could potentially use as we look at the rest of these indexes. So let's look at RTY. So remember our discussion from RTY on the 180, where we had this setup, and we said because we were going into the weekend and we had some uncertainty, this was no way we were going to hold this position. So remember, you can see price came in here, and I think on Friday I said, if you were still going to take this, I did not, by the way, just I pulled it off as a trade. But if you're going to take it, then get out at 1-to-1 or a 2-to-1, something like that, or a worst case scenario, just get out as soon as when price closes at the end of the day. So price did come down in here, would have gotten us about a 2, maybe even almost a 3-to-1. But then, as you can see, price when price opened up on the 6th yesterday, it just dropped right down below it. So pretty much exactly what we had said was going to happen did here. So if you were in it, hopefully you were able to take a little bit of profit on this on Friday, but then make sure you did not hold that over the weekend. Okay, so again, look at the 15-minute area again on RTY to see what it's doing with this gap. Gap is even messier here than it was on the NQ and ES, so that doesn't make me feel very good about it. Technically speaking, it's still a zone, so we'll draw it halfway up in, a little bit above, right? So we've already come into this one, so you got your one-to-one bounce from it. Again, if you hadn't already taken advantage of this gap area, I would not at this point. Even though we have the NQ and ES both sitting, in that same area, right? So we're close, but not there yet on ES and NQ. Yeah, same thing, close, but haven't hit it yet. So take a look at YM real quick. And again, 15-minute area, although it actually looks better on the 30-minute on the YM, so we'll take a look at that. We're back on the shorter time frame downtrend again, and so if you jump, go up into the zone a little bit, so you're a little bit further away on the Dow. So Dow showing a little bit more weakness overall. I think that actually is the case in general with it. So and honestly, there's you've got one zone. So RTY has already shown some weakness at that same area. You've got three other ones that show up in the same spot. They're all fairly close to each other. It's probably not the worst case scenario. You could even potentially take all three trades, and chances are one of them, maybe even two of them, is going to work out for you here. So yeah, honestly, now that we looked at the full picture here, it's not a bad spot. You've got a lot of good correlation markers that show that, like I said, one or two of those may actually end up working out for us. All right, let's take a look at oil. Oil had the biggest gap of everything and the biggest move last night. So oil opened up, was it almost $7 up at the open, and then went to 130.7 or so. So it was a $15 move in oil last night. And as you can see, as soon as it hit that, retraced a little bit and then right back down again, and is now dropping pretty significantly. Right, we're almost back down, filling the gap. If I look at all of the areas here, the only one that really looks clean enough to take as a potential trade here is on a 45 minutes. And so, I would, come down a little bit into it, right? You really want to go down to this bottom of this wick here. Problem with this one, right, is you got a 41-point risk, so $410 per contract, or if you use a micro, only 41. So that's actually not a worst place scenario to be in. I think in this case, the reason why I'm hesitant here, and I probably shouldn't be, honestly, is just you're so high in this context here that it's difficult to keep trusting that this is going to work. However, if we go back and look at what we talked about on Friday here, where I had this exact same discussion, right, where we talked about this zone right here, and it's like you can see it's marked as we're not taking it, we're just going to watch it, because again, we were very high in the context. And this zone actually looked really good though, right? You had a good look left, everything was protected, it took out your pivot points to your left as well. So this one had everything going for it except for it was high in the context, and you can see it worked out flawlessly, right? I mean, if you would have taken this one and held on to it, I mean, this was a $2,000 move per, sorry, way more. It was a $20,000 per contract move there. So yeah, the only reason I would say you could probably talk myself out of this one is we're talking about a gap, not an actual zone itself. So that would be the only potential negative thing here. However, certainly wouldn't be a bad place to put in a two-part trade, right? Take half of it off 1-to-1, and you could certainly break even on this thing pretty easily, and then just hold on to that second one to see how much of a bigger run up you're going to get there. On the very, very big picture, right? We actually went through our other weekly zone that we were looking at, and I'm going to just scroll over all the way over here, take a look at this one to show you where we're at here, right? This is another picture perfect zone where we had it drawn, right here. It's a couple things that you could do with this if you're taking like a longer term trade here, or potentially something in options as well. You've got your picture perfect zone area. It shouldn't go all the way in, right? But you do have this area here at 143, and then this one here, you could look at this as the zone really extending all the way out to this area, right? And it's a $10 risk, so it's hard to take those. But again, depending on how you're handling this, that would be a place where you could potentially look at this whole area here as a zone. Let me look at a couple other smaller time frames and see if we're getting any negative divergence yet that would have indicated that one was a good one. And we are not on a daily, and I'd say probably aren't on a 960 either now, or 480 minutes. So yeah, nothing really here that you could use to say that is going to be the place where we're going to stop at. So the rest of our indexes are continuing to move up right now. I want to go back and quickly take a look at them, see if they've hit these other zones. We did. No, did not yet. So we're close. Again, it's close on the ES. Let's see. NASDAQ is probably into it now. NASDAQ is into this area. RTY is back in and almost all the way through it. Again, that's not unexpected. And a little bit of negative divergence down on the 5-minute chart, but you really are, you're actually on the 240-minute trend line right here. So not the worst place in the world. Well, I think we just really kind of broke through. Yeah, never mind. We're not really here. Let me take a look into this one. Yeah. And we had some negative divergence, down here on this one as well. More of an indication that this is going to take a much further move up, bigger correction out of this particular line here. Yeah, so we've popped up above that now. Looks like we've gone up through there on the NQ is almost up through, which means ES is probably hitting it right now. Almost to it right now on the ES. Just jumping over to ES share bars just to see again, looking at negative divergence and maybe a better picture on here. You actually do have an interesting setup here on the where you've got. So this would be the trade right here. You do have negative divergence on RSI. So not the worst place in the world to be taking a trade at. Again, this is one of those ones where you just take the 1-to-1 first so that you make sure that you can at least break even, and then you hold on to the second half of that trade down for your much longer profit target there. But just looking at the overall charts, right, where we're still, oil is still dropping, gold is still dropping, all the indexes are stronger. Yeah, look, we just popped up above here now. So this one would have broken even already, and then you would have gotten stopped out. Just not a great solid place to be taking a longer term trade at. Let me go back over to oil real quick because we are coming down to this. Yeah, so you got this 115.01, and I am going to go ahead and set that one up. So let's do this. Right, we got oil. I'm gonna, so that's a 40. So for this simulated account, right, I can use two contracts. Yeah, two contracts. Get the trade window back up again. 2 contracts. So we're gonna set up at 115.01. Right, that's our buy. Here, so we're gonna buy 2. Oops, hang on. Forgot to attach our stop and target. So buy 2 at 15.02, right? Downward, then I got to 14.60 is our stop for this. So that means our 1-to-1, we'll take one of these off at, just pull this up here real quick. So let's go with, what's our 1-to-1 target is 115.41. That one off there, 115.41. There we go. Oops. Let's go down here. 15.41, and then the full one of 4-to-1 will be 116.61. So we'll go ahead and set that up. 16.61. All right, so we got that trade set up there. All right, and we are a couple minutes left here. Let's get through some of the bigger ones. Let's go look at gold real quick. All right, so gold is obviously still on this tear up, and we are okay. Even blew through this other area, this previously used area that we thought we could take advantage of, right around the 2,000 mark. The next big one we have is again the 2,040. So nothing to do until it gets up to that point. Looking to take additional longs here. So we did, by the way, close out the gap. It was a very small gap in gold last night. Nothing drastic at all there. So trying to look for anything else that we could take back long again, and nothing jumping out at me there. Let's look at natural gas. Still moving up overall. Another gap up last night. That has been, well, not quite closed yet. Actually, you can see that. So if I show you this on a 45-minute chart, this gap looks like it's working as a zone. So I would have put this one in, well, not quite, right? So I put the one in a little bit lower, but just the gap area here. That's the problem with gaps, is you don't know where they're going to be used at in here. So I would still say this is as long as price doesn't come back up and continue this this trend up, it comes back down in here, this is probably not a bad place to look for another potential trade there. NK, so Nikkei, so this is one where we had really good movement down from our 30-minute zone on Thursday, and much smaller gap down on this one, right? Very little gap at all. No zone at that gap, nothing to take advantage of there. However, on a 240-minute chart, you do still have, the downtrend continues fairly strong, and you've got these two areas here now. Where you've got good solid supply zones up here that you can definitely take advantage of. Okay, let's look at our bonds real quick, and then we'll finish with them. So just want to take a look at the daily, because it looks like we had a double top. We did on bonds. This is very interesting to see, right? We have the double top. You also have significant negative divergence on RSI as well with that. And so we had price moving up here, and then we have RSI moving down. We were very close to a zone area right here. Didn't quite get to it yet, so hard to really take full advantage of this at this point. But just it's good note. Here, remember, we still are in a downtrend, so you can take any shorts at all. And oof. All right, it's not really seeing anything lining up right there. Let's take a look at our 30-year. 30-year, we did not have that same negative divergence on the daily chart. However, still overall, I think we're still in a downtrend. Let's double check. Yep, we still are in this downtrend. So trying to take advantage of additional short positions, and yeah, just not really seeing any of those either. So real quick before we close out for the day, look at ES. So interestingly enough, right, our 15-minute zone here is holding. And so you're already at the 1-to-1. If you took this trade here, I believe RTY we know went above. Yep, poked out right above there. That would have been, you would have already had your 1-to-1, so that would have been a break even again if you'd taken it. And NQ poked up as well. Doesn't look like you would have gotten a 1-to-1 there, so that one probably would have been a loss there. And then Dow, I don't think quite, yeah, didn't. Our entry point was 545, and price came up to 537, so didn't quite hit that yet. So that one is still open if you're in those areas there. Just a reminder again how we're trading right now with the conflict going on in Ukraine. Things are a little bit messier, a little bit harder to see. Caution is always the better part of valor. We do have, I'll get the updated account graphic in for tomorrow. We made a little bit of money on the account last week. I think it was just under 1% growth, and that's because we're being extraordinarily cautious with the trades that we're taking right now. It's always better to hold on to your capital and then make use of it when you are comfortable and confident, rather than taking a stab at things and then potentially losing additional money there. So if you found this helpful, please hit the like button. Don't forget to subscribe to the channel so you get notifications when we do these live sessions and also when we release other content. Have a great and safe trading day today, and we'll see you all again tomorrow morning.